Good afternoon, everybody. It's Friday, March 24th. I want to give you a quick update on the market again. Last week we talked about the fact that Yellen was before Congress and she had said that the reason they bailed out Silicon Valley Bank was because it was basically an institutionally significant bank and they didn't want to run any risk. And if you remember, only 7% of the money was actually covered by the FDIC and they were agreed to bail out the other 93%. So when she was asked about that in her meeting with Congress, she had said that, they were just trying to protect the banking system. And the guy asked, well, what about my small banks in Oklahoma, my little community banks? If they run into problems, will all of their investors be bailed out too? And of course, what we got is they're probably not going to be bailed out. So what we're seeing happening in the result of that is investors and people, companies are moving money out of the smaller community banks and they're moving it into some of the bigger banks. So if something happens, they feel like they got a better chance of getting their protection. That is a very dangerous, slippery slope because if you start taking money out of the smaller banks, then they're going to have some problems as well meeting their numbers, and it just creates a systemic problem. So all this has created a lot of uncertainty in the mortgage industry. And the good thing, I guess, if you want to call it a good thing, is that the mortgage rates, they don't like uncertainty. So rates have gotten a little bit better. It's helped the bonds improve a little bit. So we're going to see a little bit better rates this week. And, if you say if the feds are loaning out or giving out $300 billion, I think that's a good sign that there are other banks out there that are not systemically as strong. So it is a problem. We're going to keep an eye on that for the coming weeks. But for now, that volatility has been helping interest rates. Let's take a quick look at the charts and I'll show you what's been happening just in the last couple of days. So you can see that we had this nice increase where bond prices went up pretty significantly. And just in the last 5 days, you can see we've had some good increases. Mortgage rates are getting close to the lower sixes now. And if we get some really good news on inflation in the next couple of weeks when they come out in April, we could see rates continue this improvement and get rates possibly, if we're lucky, maybe into the upper fives. That would be some really good news. So that's kind of where things are going right now. I'll give you an update next Monday. We've got a couple of big reports coming out next week as well. I think we've got the Case-Shiller home values report coming out, as well as personal consumption. Personal consumption is the Fed's favorite measure of inflation. I'll be back in touch with you on Monday. Have a great weekend, everybody.